We have a beautiful accumulation structure in stocks, and then just a really vibrant uptrend that we have been talking about, documenting, point figure counting, everything since. Now, if we go down here and look at the CRB as just a proxy for inflation forces, you can see here that we've had a pretty decisive move now above the 52-week, and looks as though we're starting to complete an accumulation style structure. This is exactly what we would expect in the traditional business cycle. Bonds move first, start their bull run, which is very muted this time. Stocks begin their bull run, and then finally you have inflation beneficiaries really as a subset of the stock market. We'll talk about that in selection, start to turn up, and that occurs as you get into what we call stage 3, stage 4. Stage 3 is when you have all of the major asset classes in bullish trends. Stage 4, you lose bonds, but stocks and inflation beneficiaries continue on their bull run. So I think, and this is sort of the payoff part to this whole discussion, normally stage 4, especially in the last couple of decades, has been relatively muted. The last time we had a really good run from commodities, inflation beneficiaries, was in the 2000s. That was a really great period for a number of different areas: fertilizers, chemicals, oil and gas. These stocks were very deep value characteristics and so on, not unlike how they are today. These stocks still have a huge amount of value. I think that we could get a long stage 3, which is good for stocks and good for the industrial economy. And we could get a longer stage 4, which normally is one of the shorter term, briefer stages. But this time, I think it could be a long one. And I think that's like a huge nuance.